Hello, everyone, and welcome to this session. My name is Maroon. I'm the VP of Operations at Farhat Accounting Lectures, and I'm here to solve a gift tax simulation. Let's start first by emphasizing two key points. The first key point relates to the annual exclusion amount, which is the maximum amount that an individual can give to another individual in a single year without incurring a gift tax or even having to report the gift to the IRS. Now, the amount is set by the IRS and can change from year to year based on inflation adjustments. As you may notice in this table, the annual exclusion amount was $10,000 for the period from 1997 till 2001 and has been adjusted many times throughout the years until it reached $18,000 in 2024. And in the past few years, it has been adjusted annually. So it was 17,000 in 2023, 16,000 in 2022, 15,000 in 2021. Therefore, on the CPA exam, the examiners might provide you with the annual exclusion amount, or they might ask you to disregard the annual exclusion amount. So you have to pay attention for the instructions. It is highly unlikely that the examiners will require you to memorize the amount by providing you a specific year. And the reason is that the examiners want to test your ability to apply the knowledge instead of memorizing figures that may change from year to year and become irrelevant in the upcoming few years. Now, the other point that I would like to emphasize is the importance of the familiarity with the transfers that are not subject to the gift tax because they are heavily tested. Examiners love to test the exceptions, and those are the exceptions for the application of the gift tax. Now, they include payments for medical and educational expenses. They should be paid directly to the medical institution for medical expenses and to the educational institution for someone else's tuition expenses regarding educational expenses. And this does not cover other educational related expenses like books, supplies, or room and board. The next item is gifts to spouses. Gifts to the donor spouses are usually exempt from gift tax. Now, there are some exceptions related to spouses that are not US citizens, but the general rule is that gifts to spouses, regardless of the amount, they are exempt from the gift tax. The next item is gifts to charities. So those are the gifts made to qualifying charities. They are not only exempt from gift tax, but they may be deductible as itemized deductions. The last item is political donations, which are gifts made directly to political organizations for their use. They are also exempt from the gift tax. Let's go ahead and get started.
Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
You are presented with a series of financial transfers made by Simon during the year 2000x3. Your objective is to determine if each transfer qualifies as a taxable gift under federal gift tax laws. Additionally, for each transfer that is deemed taxable, you will calculate the amount of the gift that is subject to tax. This calculation should take into account the annual gift tax exclusion of $17,000. So here, the annual gift tax exclusion is provided, but should ignore any potential lifetime exclusion. The lifetime exclusion is the total amount an individual can give away over their lifetime without owing gift tax. This exemption is in addition to the annual exclusion amount for gifts and encompasses all taxable gifts made during a person's lifetime as well as their estate transfers at death. So here we're going to ignore the lifetime exclusion and we're going to assume that any amount above $17,000 is taxable. Each transfer is listed in column A of the table below, and in column B, we need to indicate whether each transfer is subject to the federal gift tax. In column C, we need to calculate the amount of the gift that is taxable, if any. For transfers not subject to the federal gift tax, enter a 0. We have to always pay attention to the instructions, whether we need to leave a cell blank or we should put a 0 according to the examiner's instructions. Now, looking at the table, in column A, we have transfer description. In column B, we have to choose whether the amount is subject to gift tax, yes or no. And in column C, we have to determine the amount that is subject to gift tax. Regarding the first transfer, Simon gives $21,000 to his friend to help with the home down payment. Does this gift relate to one of the exclusions that we have mentioned before? No, it does not, and therefore this amount is subject to gift tax. However, we need first to deduct the annual exclusion of $17,000. So 21 minus 17 is 4, and the amount that is subject to gift tax is $4,000. Next, Simon pays $40,000 directly to a private university for his niece's tuition. As we mentioned before, payments made directly to an educational institution for someone else's tuition expenses are exempt from gift tax. So here our answer would be no, this amount is not subject to gift tax, and per the instructions, we have here to put 0. Next, Simon gives $18,000 on his daughter's wedding day to help cover the wedding expenses. Is covering the wedding expenses one of the exclusions from the gift tax? No. Therefore, the amount would be subject to the gift tax, and the amount subject to gift tax would be $18,000 minus $17,000. It is $1,000. Next, Simon donates $20,000 to the Red Cross. The Red Cross qualifies as a charitable organization under Section 501c, and because the Red Cross is a qualifying charitable organization, donations do not count against the donor's annual or lifetime gift tax exclusion amounts. So they are exempted, they are not subject to gift tax, and the amount subject to gift tax would be 0. Next, Simon pays Felix Hospital $32,000 to settle the bill for his mother's heart surgery. Since this amount was paid directly to the medical institution, which is the hospital, for someone else's medical expenses, it is exempted from the gift tax, and therefore it is not subject to gift tax, and the amount subject to gift tax would be 0. In our next scenario, Simon gives $25,000 to his mother to help her pay for her home care after her heart surgery. Since this amount was not paid directly to a medical institution, but rather it was given to his mother, it is subject to the gift tax. So our answer here would be yes. However, Simon would still benefit from the $17,000 exclusion amount for each donee, and the amount subject to gift tax is $25,000 minus 17, it is $8,000. Simon also made a $30,000 contribution to the campaign of a local political candidate. This is also an exemption because it is a political donation, and gifts made directly to political organizations are exempted from gift tax. Therefore, this amount is not subject to gift tax, and here we enter a 0. Now, for their 20th wedding anniversary, Simon gifts his wife, Emily, a diamond necklace valued at $18,600. Now, Simon and Emily would be glad to know that gifts to spouses are usually exempt from gift tax, and therefore the whole amount is not subject to the gift tax, and the amount subject to gift tax is 0. What should you do now? You should go to Farhat Lectures and look for additional resources to help you with your exams. Thank you for watching and happy studying.